Hello, just want to do a little trading video here. Teach y'all how to trade. So obviously I like to make money myself. That's a priority. But talking about trading is not harmful to my own trading unless I do it too much, and then just come to a point where I've talked about it so much that I've given away everything and there's nothing for me to do. So for me, it's about being in a zone and using your instincts. So people talk about all the successful traders, Stephen Ducks, Tim Sykes, Stephen Ducks more so. Talk about patterns and probabilities with patterns and back testing, and looking at certain patterns in certain scenarios. And that's what you want to find. You want to find a certain pattern in a certain scenario, but it's not as ABC as that, because every single stock, the way it moves, is completely different. Vastly different from another stock, and every single stock is moving in its own way, and it's reacting due to reasons. This UGAS there bounced off $14 there. I just saw that. I didn't see how much. I didn't see what the price was there, but it's $14. It's been bouncing off on October the 7th, and if you look at just before October the 2nd, it's bounced off. It's hit up there as well, and then it's sort of gone up. So you're looking at the story. October 2nd, there it's bounced up. It's hit $14, dropped down again. Went down to $12.50 on October the 3rd, then it just went up towards the end of the day, and then October the 4th got down a bit, but then just went right up to $15.50, and then it's just bounced off $14 again. Very, $14 is a whole dollar mark, and that's why it bounced off there, So, got my alarm here that's gone off way too early in the morning. But obviously, if it's a terrible day in the markets and it's all going to hell and high water, or this particular stock, UGAS, has some issues. This is natural gas. So this is a long natural gas ETN linked to the S&P GSCI natural gas index. You've got correlated stocks here. This is natural gas, basically. This is correlated almost. It's almost identical there. Almost identical. And there's going to be a bear version of this as well, which will be on the correlated stocks there, and it will be on the inverse correlation here, DGAS. And that'll be the exact opposite. So if you turn that chart upside down, it will be exactly the opposite. You can see there's 140 there on October the 7th, and it hasn't quite hit, so it hasn't done exactly the same, but it's almost identical. So obviously, if you're trading this chart and you're trading over a longer time frame, and you're looking for dips and troughs, where you can take advantage of big movements that are destined to rebound. So say for example in October there, see it's trending down there, but it's going down, up, down, up, down, up, and maybe you see that green candle right in the middle of the screen there. So it's made a green candle right in the middle of the screen, and before those two red candles, but you might have been able to short it up the top of that green candle, But obviously, if you've got the inversely correlated one, you go long on it. You go long on the inversely correlated one, and you go short on this one, and that completely protects you from the market, how the market reacts. So if there's suddenly a big drop in one of them, there'll be a big gain in the other one, and you'll win on both of you. Well, yeah, you'll win on both of them. You'll win on both of them because they're making. Anyway, it's very interesting, really. I mean, you could literally just... That's why these ETFs are good. That's why these traders like to trade these ETFs, because they've got the bear versions of it as well. They can hedge their... You know, hedging is a buzzword, and people say it a lot, and a lot of the time people don't know what they mean by hedging, but they just like to say it. But personally, I don't bother doing that. I don't need to do that, because I look at the market condition. I look at what's going on, and I only need to trade one. And then obviously, a lot of most of the stocks don't have inversely correlated polar linked instruments, assets. Well, stocks, they don't have inverse ones. So so let's have a little bit. Look at this natural gas thing, okay? So, September the 18th is the last bit of news. It's October the 8th, so there was no news going on here. There was no news specific to this ETN. Well, it's an ETF, exchange traded fund then, an ETF. So you could have played the patterns on this, and so look at the daily chart. Just looking at the way it bounced off 40, so it's really, well, that's a weekly chart, but it's really low there. You can see that we're really low down, and it's come up a bit, and then it's come down to 14.10. We're low down at the moment, very low. So obviously, over a long term, this could be something that would work, but obviously it might not. But look at that. Oh my God! I mean, 2014, it was at 5,000. Imagine if you'd have had money invested in this. There's got to be people out there that have held a lot of shares in this company. It's got the volume's huge as well. But it's huge now, but it would have been less back at 2014. The volume would have been less. Let's have a look how much the volume would be for a day. Well, for a week in 2014, see how much volume there was. So when it's up, okay, I want to try and go back a bit here. Oh, you can see at the bottom. Okay, 5,000. Let's have a look. Look, 500. There's only 10,000 in that week. There was only 10,000 shares traded. Look, volume. You can see there. It says volume 10.85 thousand. And that's in a week of trading when it was up at 4,500. No, 45,000 per share. No, it can't be right. Yeah, look, it was at $45,000 per share. Anyway, very interesting, all of this, I mean, I've gone too far into it there. Obviously, I'm doing a video, so if you do this stuff on your own, you go through stuff quicker, But obviously, I'm narrating what I'm doing. I don't know if you're following it, but I love this thing. It's so good because it gives you a good, it shows you that it's not just all up and down. There's some stocks that are going up, there's some stocks that are going down, but in general, the stocks have been going down. So you're trading the individual stocks, but you're using these main markets as the big ocean. I have the SPY and I look at that regularly. I have a browser tab open with this SPY on it, and every 10 minutes or I'll have a quick look and I'll look what's going on with it. I'll look where it is and think, okay, what's happening at the moment? Is it at a contentious point where it's like it could have a big drop? And here it could. You can see that it's making a nice pattern, but it's high up here at 295. So if I'm looking at Market Watch, looking at the day for today, because this is a daily chart here, then you could think, well, it might go back, it might go up to like 1296 there. It might kind of go up to that diagonal down pattern, but it's got resistance there at 295, and it had a big drop. You can see 4 days ago it looked bad, so there was bad stuff going on in the market there. It went down to 285 there, and you can see that it recovered. And obviously with all the other stocks that day, when it hit 285 just 3 days ago there, it would have been a good day in the markets, and it would have, it's very strange. You can see where you're at with this, with looking at this ETF, this SPY. The best representation of the overall market movement, the big ocean. So you look at that and you're saying, well, I'm going to see where it opens today and keep an eye on it, see what it's doing. Is it going to be a terrible day? So I'll read all the newspapers, the marketwatch.com, see how things are going at the open, and gently ease into it. Start looking, and just keep looking and looking, keep lurking at it. Keep. It's work. It requires work. It does require work, but it's not monotonous because it's interesting, and it's very exciting because. I was thinking about it earlier. I was always trying to put it into an abstract form. But a good analogy is that it's a fountain. It's a water fountain. And you're going to the water fountain with your cup. And if you're not skilled, you're not going to catch any water, or you're going to spill some. But if you're skilled, every time you go to it, you can catch the water because you're skilled, Well, it's almost you don't want to catch it. You want to get it when it's shooting up, when it's coming out of the fountain. So it's spraying up out the fountain. You want to ride that up with your cup there and kind of go with the gravity. Go with the upward momentum and fill your cup up as it goes up. Or if you're betting on it going down, then just where it's about to lose, where gravity's about to take over and it's about to fall down. If you can catch that crest, and bet on it going down at that crest, and you get the very top, you're laughing because you've done all the work. As soon as you've got in the stock, there's nothing you can do about it. As soon as you've found a stock to get in, and it's work, but as soon as you find a stock to get in, that's it. The work is over. You've done it. You put your money where your skills are at, and now you're expecting to take a profit. That's what you want to do, You want to win. You want to have the mentality to win every single trade. You don't want to just get in a trade and say, okay, this is pretty good, but I'm going to get in it. No. You want to get the certain ones every single time because there are very, very high probability setups every single day all over the place. I mean, I don't want to say I'm great or anything because obviously I haven't really made much money yet, but I know that I can do this every day consistently, and I've been looking. I haven't really seen much. The H-band there, it went up to $14 and it rejected it, but it's a big green candle. It could have broken it quite easily. I mean, that doesn't look like the best setup for me to short it at $14 there because it's been creeping up to $14, sticking right up there. It could have just broken it and just shot up. So I think I would have probably stayed away from that. But those round numbers, those round whole dollar marks, they, if you like here, for example, look, wow, that's 11.80. But say, for example, that would have been $11. I mean, look, it's 11.80, but look at the resistance there. October the 2nd, October the 2nd, it was hitting 11.80, and it dropped right down to 11.50. And it's a big extension up from beginning of October the 4th there to the start. A little bit along on October the 7th, 11.80, and it's a very strong level of resistance, and it's been going up really strongly, and it's extended up there 11.80, but obviously it didn't quite hit 11.80, and it wasn't a big gain. You would have shorted that 11.78 if you'd have got the very top, so it paid the spread obviously, and you could have got out at 11.71. That's and then another cent for fees, so that's 3, 4, 5, 6, 7, 5 cents per share, you know. But 5 cents per share, if it's an almost certain to work, you're probably risking about 7 cents per share or 8 cents per share to make 5 cents per share. But if it's a 90% chance to work, obviously over the long run that is going to work. But you want it to be very, very, very high probability. You know, you want to get the ones that you're almost certain are going to work every single time. Look, $14 there. Look, it bounced off. It had a little extension over it. I think I saw this stock actually. You know, it was October 2nd, 3rd, 4th. You know, it's going up. It's holding the $14, and then at the end of October the 4th, it goes above. It looks like it's going to break out the end of the day, which is a good sign. And then obviously the next day it just drops down to $14, and that's it. It goes right up to $14.50, and that would have been a huge gain. You know, especially if you're using margin. Talking about 15% gain on that. You know. Just for catching it off $14. Obviously, what's he getting? You don't know it's going to go that high. You'd probably, you know, I'd be more inclined to get out. You see the high of October the 4th there at the end of the day, I'd probably be inclined to get out there. So I'd probably, if I had the balls, well, I'd have to look at the chart going along here as well. But I mean, I'd tend to get out early. You know, maybe I would have gotten out at $14.20 if I got in at $14 and went to $14.20. You know, I might want to get out there, but it's difficult. Anyway, I'm going to finish this video now, so I hope you enjoyed that and learned something from it, and I'll see you next time.